Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar rockets to the highs of 70 cents, its highest level since Feb 2023, as elevated Australian yields and a sharply weaker US dollar kept the Aussie bulls firmly in control. The US dollar index has slumped now to a low of 95.60, its weakest point since March 2022, as investors dumped the greenback for the fourth consecutive day. Back home, Australia's inflation backdrop strengthens the case for a rate hike at the RBA's first 2026 meeting next week, after the CPI rose by 3.8% in year to December. In contrast, the US dollar remains under pressure as President Trump played down the move, while softer US consumer confidence and weaker ADP jobs data added to the drag ahead of the Fed's decision, where rates are expected to stay on hold at 3.75%, as the focus will shift to the meeting when Powell addresses his press conference. The tone will be noted due to the fact that it's coming up to the end of his term, and also there is pressure on him resigning. Technically, though, the RSI is positive, but in overbought territory. The ADX is in a strong bull trend along with the MACD. I do feel that any pullback may be light around 69.65, but a break could see 69 cents. But I said it could be light and maybe seeing another test towards 70.30 as a potential target. Moving on to the euro, well, the market rocketed to a fresh 5-year high after inking in above 120.45, and aggressive US dollar selling or supply, followed by President Trump's remarks that the dollar was seeking its own level, effectively green-lighting further downside. Trade war fears resurfaced after new tariff threats, while weak US consumer confidence and softer labour market signaling dragged the US dollar to its lows that was last seen back in March 2022. The ECB officials signal no urgency to adjust rates, leaving markets focused, as I mentioned, to Wednesday's Fed rate decision. Looking at the technicals, well, we've crushed the level of 118 and now looking to about 120 or even as high as 123. Any pullback sees support around the lows of 119. Dollar yen, well, since the pivot to the downside from the break of that trend, gives us a swing now to 151, which isn't too far away after hitting the low 152.14. We may find some supply still coming into the European session, but demand may find from the lows of 151 and reassess. Well, the market's still looking for sterling rally as it pushes now towards 138, 138.5. I like the way this market has recovered and therefore not pulling back to 140 as a potential target. That could see the rally on to 140 before any pullback. Wrapping up with commodities, the market's surging higher as talk now of 5,500 as a target. We can see here that it's ignored that gravestone doji and the bulls are just continuously pushing higher. That could see 5,300 to 5,500. Dips to be shallow. Oil reaches its target of $62.50 a barrel. That could push now to 64 before any turnaround. Overall, though, I do feel that the bulls have the way and could see that rally on, as I mentioned, the 64. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday pool. I hope you enjoy the great start to the day.